Deep dive into one of the companies that I hold in my portfolio. The company that we'll be looking at is Texas Instruments, short name TI. So when I think about Texas Instruments, I start to get nostalgic and think about my pre-calculus math class, using graphing calculators for solving various equations and playing little mini games. But realistically, making graphing calculators, it's only a small portion of TI's business. It's really only about 5% of their total business. So that begs the question, what do they actually do all day if they're not making graphing calculators? So who better to tell us what they do than TI themselves?
At Texas Instruments, our passion is to create a better world by making electronics more affordable through semiconductors. As the building blocks of modern electronics, our semiconductor technologies help customers develop solutions to the world's toughest challenges, enabling smart medical devices, automated factories, more efficient appliances, and making vehicle electrification possible. Each electronic device you interact with could have tens, hundreds, or even thousands of chips inside, translating signals from the physical universe into digital data and back again, adding intelligence and new functionality to things we use every day. And all of this is possible because companies like TI have been engineering progress for decades. The vacuum tube was once at the heart of all electronics. For the first time, entertainment and information could be transmitted and received in real time. In 1954, TI engineer Gordon Teal introduced the world's first commercial silicon transistor. Electronics became personal and could be held in your hand, and things never before imagined were possible. 4 years later, in 1958, TI engineer Jack Kilby combined multiple transistors onto a single piece of semiconducting material to create the world's first integrated circuit. The chip that Jack built changed the world forever. Radar systems were made more reliable. Spacecraft were built with smaller, lighter, more dependable components. Computing power that once cost millions became more powerful, affordable, and could fit in your pocket. Through decades of progress, our innovations continue to make electronics more accessible to more people. And today, semiconductors are so affordable that they're being added to everything. Home automation makes the places we live more convenient, energy efficient, and safe. Portable medical devices monitor and transmit vital health data in real time. Cars equipped with sensing technology make driving safer than ever before. Industrial robotics make factories safer and increase productivity. Entire cities are smarter, more efficient, and more connected. Where we were once limited by technology, we are now limited only by imagination. At TI, our passion is to create a better world by making electronics more affordable through semiconductors. We think of it as engineering progress. We've been doing it for decades. We continue today, and we can't wait for tomorrow.
All right, what a great video. So as we saw, Texas Instruments makes semiconductor chips that go into electronics that we use every day. So we saw the types of chips that they make, and they go into our cars, our phones, our computers, fridges, smart home systems, and they even make chips for manufacturing facilities. So if you think about it, you're probably using electronics that, contain their chips. There's definitely a lot more to TI than we originally thought with graphing calculators. So let's go and check out the rest of their website and see what else we can find out about them. So if we go to About TI, and then we can see right here the company. Scroll down. There's a lot of options here, a lot to read. Let's look at TI at a glance. All right, so like they said, they've been making progress for decades. They're a global semiconductor company that designs, manufactures, tests, and sells analog and embedded processing chips. So analog chips and embedded processing chips, digital chips. When you think of a computer chip, you're usually thinking of, a computer chip, a digital chip, where, a lot of people forget that there are other types of chips that need to go along with those digital chips. So here, Texas Instruments strives on making the best analog chips they can make, which, analog chips are chips that are required for power sources. So whenever you make, a computer and you have a bunch of digital chips, you need analog chips that help provide the power source for your computer or those digital chips. So they have a wide variety of products, 80,000 products, and over 100,000 customers. So they help those customers, like we said, with analog chips, manage power, accurately sense and transmit data, and provide the core control of processing in their designs. Going into markets such as industrial, they're in automotive, personal electronics, communications equipment, and enterprise systems. So let's look at their key facts. They've been around for, you know, what is that, 90 years? They're founded in 1930. They're headquartered in Dallas, Texas. They trade publicly under the ticker TXN. Richard K. Templeton is the current chairman, president, and CEO. They have 31,000 employees spread across, the Americas, Asia Pacific, and some in Europe. So as we scroll down, we can see they give us a nice pie chart here describing their revenue. In 2021, 14 billion was in analog chips. So these are again the power source chips that are used. That's the majority of their business. And then they have some embedded chips, and this other right here, this is the graphing calculators we were talking about. Makes up a very small portion of their total revenue. They're spread across different industries. Industrial, they're 41% in industrial manufacturing, 21% in automotive, personal electronics 24%, and the others smaller categories here. So their revenue is split up across different segments, majority being industrial, but they have very strong footholds in these other sectors such as automotive and personal electronics. So now that we know what they do, we might ask the question like, why do we want to be shareholders in this company? So let's go and see. Let's go to their main page. If we go to About TI, we can go to the investor relations page. I love their website. It's very easy to follow and it's very organized. So here we can see, they're traded on the Nasdaq. Here's their price per share, the amount of shares outstanding, and right here, look at this quote from Rich Templeton, their chairman, president, and CEO. The best measure to judge a company's performance over time is growth of free cash flow per share, and we believe that it's what drives long-term value for our owners. This sentence, I could not say it any better, is exactly what we want to see the CEO, the president, the chairman, management of a company, communicate to us as shareholders. As shareholders, this is exactly what we want to do. Our investment, we want to grow our free cash flow per our equity ownership of the company. So it's amazing to see that management is thinking of us first. As we scroll down, they give some very great details here. Free cash flow per share. Their free cash flow per share has grown at a high annual rate of 12% per year for the past 18 years. That's just amazing. Their dividend growth, I bought this holding as a dividend play, a dividend growth play. Over 19 years of consecutive dividend increases, averaging 25% compound annual growth rate of their dividend. So they're growing their dividend annually at a rate of 25% per year. It's just amazing. Now, if we scroll down, we can see share count reduction. They've reduced their share count by almost 50% in the past, 18 or so years. So this is awesome. They take the free cash flow that they generate from their business and they use it to buy back shares, which gives me a higher percentage ownership of the company. This is exactly what I want to see here as a shareholder. Okay, so now that we've looked at why we want to invest in this company and the amazing metrics they've given us, let's take a look at they have investor resources and what they call an investor overview. So they're very transparent. They give you It's not a very long report at all, and it's very, very detailed and to the point. So at TI, they run a company with being the mindset of a long-term, owner. This is exactly what we want to see. They're thinking of us as shareholders first. As we saw, they believe in the growth of free cash flow per share. And they have four competitive advantages, which we'll touch on later: manufacturing and technology, broad product portfolio. We saw before that they have 80,000 products being sold to over 100,000 consumers. They have a broad reach of their market channels and diverse and long-lived positions. So I encourage you, to take a look at this. Here's highlighting the financial performance metrics that we just looked at: the free cash flow per share, the increase in dividends, reducing the share count, and these three bullet points right here are absolutely astonishing. So in free cash flow in the S&P 500, the 500 largest companies in the US, they're in the almost 90th percentile, top 90th percentile of companies to grow their free cash flow per share on their margin basis. They're again almost in the top 90th percentile in returning cash as their percentage of their revenue to us investors, and then almost they're in the 97th percentile here in the top 500 companies in the S&P for returning for a return on their invested capital. So the money that's invested into the company, they use it to gain a high return on that initial investment, and they're in the top 90th 97th percentile in the total 500 largest companies in the S&P 500 and in the US. It's just amazing. So I encourage you to read all of this. It's not very long. Super helpful when deciding if TI is a good stock to add to your portfolio. So here I just want to touch on their revenue. So as we looked at, 41% is industrial, automotive 21%, personal electronics, and then other for the others. It's very well diverse, so you're getting exposure to industrial markets, automotive, and personal electronics. And if we look at their financial segments, so analog, as we saw, is their largest segment. It makes up about 77% of their total revenue. And they hold a leading position in this market, and they believe that they're well positioned to increase their leading position over time. So in a world, this is exactly what we were talking about before, where you think that digital chips, when you think of a chip, it has to be a computer chip or a digital chip. Why would you buy Texas Instruments if they're making analog chips, right? Power source chips. So they kind of speak to that here. In a world where everything is going digital, we often get asked why analog is a growing opportunity. And this is because every electronic product requires analog technology, because analog provides the power to run those devices and is fundamental to how technology interfaces with human beings, the real world, and other electronic devices. So as digitization continues to grow and digital chips continue to grow, they'll continue to need power sources. Therefore, they will continue to need analog chips, and they will both grow together. So as we can see here, like we said, 77%, which is the almost 80% of their revenue comes from analog chips, and they are currently the market leader. So I encourage you, to continue to keep reading through this. They have a summary here, super great information. So as we can see, like we said, we looked at this investor overview. We talked about their different revenue segments. I actually want to go back and watch what they do with this revenue. What do they do with this cash that they generate? How do they allocate this capital? Capital being another word for cash. So they actually have a video here.
An important element of our strategy to maximize free cash flow per share growth is disciplined allocation of capital to the best opportunities. This spans how we select R&D projects, develop new capabilities like TI.com, invest in new manufacturing capacity, or how we think about acquisitions and returning cash to owners. Given the magnitude of our capital allocation, you can quickly appreciate why capital allocation is a job we take seriously and one that has significant impact on owner returns. Our largest category of capital allocation is investment in critical areas that drive organic growth, such as R&D, sales and marketing, capital expenditures, and working capital for inventory. We are pleased with the results of our investments in R&D that strengthen both our manufacturing process technology as well as our product portfolio. The second largest category is share repurchases. Here, our objective is the accretive capture of future free cash flow for long-term owners. We focus on consistent repurchases when the present stock price is below the intrinsic value, using reasonable growth assumptions. Next is dividends, where our objective is to appeal to a broader set of investors, and we focus on their sustainability and growth for obvious reasons. And finally, potential acquisitions are evaluated through two primary factors that have remained unchanged. It must be a strategic match, meaning catalog analog focus, with high exposure to industrial and automotive. Additionally, it must meet certain financial metrics, such as generating a return greater than our weighted average cost of capital within about 4 years. From an R&D standpoint, investments are allocated to higher value growth opportunities in order to strengthen our technology and product portfolio, while improving diversity and longevity. Our focus is on the best products in the semiconductor industry, analog and embedded processing, with a strategic emphasis on the best markets, industrial and automotive. As shown here, we sell our chips into 6 end markets. We see good opportunities in all of our markets, but as I mentioned, we place additional strategic emphasis on industrial and automotive. Our industrial and automotive customers are increasingly turning to analog and embedded technology to make their end products smarter, safer, more connected, and more efficient. These trends have and will continue to result in growing chip content per application, which will drive faster growth compared to our other markets. The industrial and automotive markets have high diversity, meaning many customers, many sectors, and many equipment types. These markets also have high longevity, where they tend to have life cycles ranging from several years to several decades. Success in industrial and automotive, therefore, requires a long-term commitment and a willingness to invest broadly across sectors and product categories, both of which we have done and continue to do. As you can see, we apply a very disciplined approach to capital allocation to ensure our investments are going to the best opportunities, strengthening our competitive advantages, and generating the maximum return for owners.
So again, that's another great video. As we can see, they prioritize reinvesting into growing their business, with well-researched companies, rewarding, shareholders by repurchasing shares at a high rate when they feel that their share price is a lot lower than the market thinks it is, and they pay out an increasing dividend. This is exactly what I want from an investment. So one thing that we do need to be worried about, this isn't a perfect company, and every business, and company has its own risks. One big risk might be competition. So what are TI's, competitive advantages? We need to look over those and see what advantages it has over its competitors. So here we can see they have another video on their competitive advantages. Let's take a look at that.
TI's business model is built on 4 competitive advantages. In combination, these advantages provide tangible benefits, are difficult to replicate, and ultimately separate us from our best peers. Our manufacturing and technology competitive advantage results in lower manufacturing costs and greater control of our supply chain. A chip built on our 300 millimeter wafers costs about 40% less than a chip built on 200 millimeter wafers, the size used by most of our competitors. We also perform the majority of assembly and testing internally, which gives us additional cost advantages and greater control of our supply chain. Our second competitive advantage is the breadth of our product portfolio. Most customers' applications use tens, if not hundreds, of chips in each system. Our breadth of product portfolio gives us access to more customers because there is high probability a customer will visit TI.com while designing their system. It also means that we have the opportunity to sell more chips into each customer application. Each year, we expand our portfolio and ensure long-term return on investment, given that many of our products can live for 10 to 20 years or longer. Our third competitive advantage is the reach of our market channels, referring to our online presence through TI.com and our global sales and applications team. We have tens of millions of visits to TI.com annually. And because of our broad portfolio and revenue, we're able to invest in a global sales and applications team that's bigger than our competition. We work to make TI the most convenient place for our customers to search, select, design, ramp to production, and eventually purchase their chips. This advantage means we have access to more customers and design projects, leading to the opportunity to sell more of our products. Additionally, broader and deeper access gives us better insight and knowledge of customer needs. Lastly, we have diverse and long-lived positions with our products, markets, and customers. Diversity means we're not overly reliant on any one chip, customer, or market. Longevity means the investments we make in manufacturing equipment and process technologies, which are typically used for 20 years and more, make our business less capital intensive. Longevity also means the revenue associated with products and customer design sockets we win typically lives for a long period of time, from several years to several decades. Our owners can have confidence in the high terminal value for our portfolio. Together, these four competitive advantages help position TI in a unique class of companies capable of generating and returning significant amounts of cash for our owners.
Again, what an awesome video. So we see that they have very nice competitive advantages when compared to their other, to their competition. They can control their costs as they can, control the whole product manufacturing process. They take it from beginning to end, do all their own testing, and like he said, their chips on those 300 millimeter wafers are costing them 40% less than their competition. So they save their costs and increase their profit margin. So they customize their products based on consumer needs and have a very diverse set of products and consumers. So let's, now that we've looked at TI, let's go and look at their financial metrics. I'm going to use software called Qualtrum. So this is my portfolio. Let's scroll down and let's go look at Texas Instruments. Okay, so here we can see Texas Instruments, ticker symbol TXN, trades at $175 per share, has a market capitalization of $159 billion. Price to earnings, that's just the price of the company divided by the earnings per share. It's at about 18. And they have free cash flow yield, meaning they give out a cash flow yield of 3.70%. We have a snippet of their balance sheet. They have $9 billion in cash, $7 billion in debt, meaning they have net cash of $1.65 billion. They pay a healthy dividend at 2.83%, a payout ratio of 48%. So they have a lot of room to grow their dividend over time. And now let's go and look at for instance, their revenue. So we can see their revenue has increased over time. At an average annual rate over the past 10 years of 4.45%. So not huge growth, but as you can see, it's last year, it was 12%, 2 years 17%, 5 years lower. So it's very cyclical, which is the semiconductor industry. They have their ups and downs, very cyclical. But as long as it's growing over time at a decent rate, that's what we want to see as investors. So what's more important here is going to be these next metrics, which you look at EBITDA. So EBITDA is just a fancy way of saying earnings before interest, tax, and depreciation. So we can see over the past 10 years, it's grown at almost 10% per year. This is awesome. We love to see their earnings growing and at a high rate. Now, if you look at their net income, it's at 11% per year over the past 10 years. So they're able, like he said, get a higher margin on their products, a higher profit margin, and control their costs, which translates into a higher net income percentage, 11% per year over the past 10 years. Okay. Free cash flow, we would expect close to the same. They're growing it at about 6.5% per year. So this is awesome to see. Let's look at their earnings per share. this is amazing. You know, they're growing their earnings per share at 13% per year over the past 10 years. So you're getting a higher earning per the share investment that you have every single year at an average rate of 13, almost 14% per year. Like we talked about, you know, their cash and debt. So here we have, you know, I like to invest in cash rich companies and with not a lot of debt. So, you know, you can see they've had their ups and downs with cash and debt, you know, a little bit more debt in these previous years, but they're still net cash positive. So the red line being the debt, the green line being the cash. They're still cash positive. These peach lines are called capital leases. You know, that's more of an accounting classification. So you have to record a lease on like a manufacturing facility or any long-term leases you have on office buildings. And now accounting classifications make you record them as debt. But they're not technically debt. They're just lease payments that you have to make over the lifetime of you having that rent that you owe for that facility. Now, dividends, as we said, they grow dividends at a very fast rate, at an average over the past 10 years of almost 20% per year. So that's just amazing. You know, we're investing in Texas Instruments to get a higher dividend, higher earnings per share. And right here we can see the shares outstanding, like we said, since 2004, so, you know, 18 years, they've increased their share count, decreased, sorry, their share count by 50% total. So it's just amazing. They're taking 2% out of the total shares each year and buying them back just to cancel them. So you get a bigger portion of the pie at an average rate of 2% per year over the past 10 years. It's just amazing. So that's their financial metrics, you know, at a high level. In closing, you know, I just want to say I currently own TI, Texas Instruments, in my long-term portfolio. And I'll keep adding, you know, as I see opportunities. As you know, my exposure isn't that high. It makes up about 5% of my account. I'd love to get it to 7.5% because I see a lot of value here and a lot of opportunities. It's a great, solid, well-run business. It's solid dividend growing stock. You know, it's very shareholder friendly, as we saw with their CFO speaking to it. You know, the way their website is outlined and their investor relations page. They think about the shareholder and the owner first. So again, thank you for watching. I really hope, you know, this provided some background and context into Texas Instruments, and I hope you have an awesome day. Please note, I'm not a financial advisor, and please do your own due diligence before investing. Again, thank you and have an awesome day.